Vanakkam. Today we are going to cover another important topic of compliance with accounting standards for practice unit as part 2 under peer review. So this all another important area wherein every practice unit has to concentrate. And once again, this technical, professional, and ethical standards compliance have been divided into 4 parts. One is accounting standard, standards issued by ICA, framework issued by ICA, applicable provisions of various statutes or regulations. Now, we are going to start with accounting for government grants. That is, if any unit which the practice unit is going to verify whether the company has followed the government grants in a correct manner. First thing, basically, we will discuss a government grant. For any government grant, there should be a scheme, proper scheme should be there, and there's a sanction letter should be specifically mentioned, and the usage of funds have to be clearly mentioned in the sanction letter of the government grants. So this is in general I want to say about the government grants, whether the grant in non-monetary asset have been recognized at cost or nominal value. So you have to value the non-monetary asset at the cost or nominal value. It should not be based on the market value. So this practice unit, they have to practice units, they have to verify. In case of government grant has characteristics similar to those of promoter contribution, sometimes in say for example, there will be equal subsidy. There will be equal subsidy. Say in TOTCO scheme, 50% is the promoter's contribution, 50% is the government contribution. Then whether those types of the contributions have been properly received or have been properly recorded, and the government grants have to be credited to capital reserve. It should not be given credit to the P&L account. So this point you have to see with reference to accounting for government grants. Whether proper treatment of grants for depreciable or non-depreciable assets has been followed. Because the government grants, asset is asset. So whether it's a depreciable asset or non-depreciable asset, whether the treatment of value, application of depreciations have to be followed correctly. And in case of grant for specific assets, suppose if the government grant is to buy a particular asset or if to buy a particular event to do the particular event, that grant should be used only for that purpose. It should not be used for any other purpose. So the grant is shown as deduction from the cost. Suppose if the machinery is say 1 lakh and if the government is giving 50,000 rupees. So because you are taking this 50,000 to the capital reserve, only 50,000 is the promoter contribution. So depreciation has to be calculated only for the 50,000 and not as 1 lakh. So in case of grant of specific asset, grant is shown as deduction from the cost of the asset or not. So as a practicing unit, you have to verify whether that has been followed correctly by the company or not. Whether the contingency or refund, if any, have been recognized as per AS4 and AS5 respectively. So in case of contingency or refund, is there any government grants that has to be followed as per the principles laid down in that is accounting standard for AS4 or AS5. Whether the following disclosures have been made specifically, there is policy adopted for grants. For this, please refer the government scheme, and the government has clearly spelled out the policy and the way in which they are going to sanction the money to the company. Everything has to be clearly mentioned in the circular. So that point you have to see, and nature of extent and grant extent. So what is the total amount sanctioned, or for what purpose they have sanctioned? Everything have to be clearly mentioned in the circular, and this you have to see. This is with reference to the accounting for government grants. Normally, it will not be applicable. It will not be there in almost all companies. Only a few companies they used to receive the government grants. Next one is accounting for investments. So next one is how to account for the investments. So ensure that the investments are classified as long-term investment and current investment. You know that long-term investments are in the form of debentures, in the form of shares purchased, and even buying the machinery, everything, they made the investment. And current investment will be in the form of fixed deposits or for shorter term. It will be there in the current investment. So if there is any entry in the investment head under the balance sheet, as the practice unit has to ensure whether it's a long-term investment or current investments. And to get that investment, you have to pay some commission. Whether that is included in the cost or not. In the investment, that has to, because that has to be, that expenditure expenditures have to be capitalized. So that has to be added to the cost. It has to be added to the. And next one is, if yes, as the fair value of such shares or securities being taken as the cost of acquisition. So if you add it, so what is the actual cost? That is, you have to have only the fair value of such shares or securities at the time of entering the same in the balance sheet. That point you have to see. Next point is, has any investment been made, acquired by way of exchange of for another? This is just like a barter system. Suppose you give this share, I give this share. So if they made the exchange, so both the shares have to be valued, and the extra amount has to be given back. So as the investment, this is also the role of practice unit. You have to be very, very careful as the any investment being acquired by way of exchange for another asset. It is not out of a fund paid. There is a cash paid. If yes, as the fair value of the assets being given up or investment acquired being taken as the cost of the asset. So very simple. Suppose if you are valuing one share as 100 rupees, suppose another person is giving exchange for 150 rupees, the valuation should be fair. That point you have to see. For that, the companies they have to acquire the valuation report from the appropriate valuer. All changes being in carrying out the investments being taken to profit and loss account. Suppose if you do the valuation, if there is any profit, that profit should be given credit to the P&L account. If there is any loss, that loss has to be debited to the P&L account. So these changes have to be recorded, and it's the duty of the practicing unit has to see whether these changes have been recorded, recorded properly by the company or not. Have gains or losses on disposal of investments. Sometimes you would have purchased some investments at say 1 lakh rupee, you would have disposed it for 1,10,000 rupees. That is a profit of 10,000. In the previous case, it is exchange. Due to exchange, you are getting some profit that is being given credit to the P&L account. Here, you are selling it. You purchase at the rate of 1 lakh and selling it for 1,10,000. That 10,000 has to be taken to the P&L account credit side. In case if you are selling at the loss, the same thing has to be recorded in the profit and loss account. This you are, as an auditor, as a practice unit, you have to see this. And before going to the next AS, that is the AS 14, before going to the AS 14, I want to discuss about the 5 conditions of amalgamation. So because this 5 conditions should be needed by everyone. All assets and liabilities have to be taken by the company. In case of amalgamation, amalgamation includes merger, merger includes amalgamation. So when there is an amalgamation, all the assets and liabilities of both the companies have to be taken over by the new company. There should not be any left out. And the book value has to be transferred and not the revalue, because at the time of transferring the asset to the new company, only the book value has to be transferred and not the resale value. And purchase consideration has to be given only in the form of equity shares. So it should not be paid in the form of cash. And at least 90% of the shareholders to be continued in the new company. There is no condition that all the existing shareholders should be there in the new company, but at least 90% of the shareholders should be continued in the new company, and nature of the business to be continued. Same nature of the business have to be continued. If any one of the conditions have been failed, it will be treated as purchase of company. So this is a difference, and these are first 5 conditions that you have to see, you have to remember, because AS 14 says these 5 conditions. So check in case of there is an amalgamation during the year. Suppose in case there is an amalgamation, determine whether it is an amalgamation in the nature of merger, and does it satisfy all 5 conditions stipulated in this. This all 5 conditions we already discussed. Then pooling of interest method is used in case of amalgamation, in case of merger, in the nature of merger. That is all the interest pooled. and the same thing has to be continued in the nature of, if it is in the nature of merger. Whether the purchase method is used in the case of amalgamation, the nature of purchase. We have already seen the 5 conditions that the 5 can suppose if all those above said 5 conditions have not been fulfilled, then that is called as purchase company. So whether which method is used, whether it is in the nature of amalgamation, whether it is in the nature of purchase. So everything has to be seen by the practice unit. And whether when non-cash elements are included in consideration paid, because in amalgamation, the shares have to be paid and no cash is involved. So this is called as non-cash element. Whether they have been considered the fair value. So here you have to consider the fair value. That means every share of the new company also have to be valued by the valuer. I think at present who is the valuer? The valuer is the person who has qualified SFA, that is by the examination conducted by Insolvency and Bankruptcy Code of India. They have to, all the valuers, they have to value the shares, and both the existing company shares have to be valued and the new company shares have to be valued, then they have to exchange it. So this is called as, now if there is any non-cash elements, that is nothing but issue of shares. The shares value should be equal in the new company. When the scheme of amalgamation is sanctioned under a statute prescribed, suppose if the government says that it's a scheme of amalgamation, then government is giving that is shares under the scheme of amalgamation, prescribes the treatment to be given in the reserves of the transfer company after amalgamation has been followed. So the government has, suppose in the scheme of statute, as per the law, if there is an amalgamation, what are these? How they have to treat the reserves, that has to be clearly followed by the amalgamated, that is new amalgamated company. When an amalgamation is affected after the balance sheet date, but before the issuance of the final statements of either party, whether disclosure is in accordance with the AS4. AS4 indirectly it is events occurring after beta balance sheet. In case after the balance sheet, if there is an amalgamation, but before you sign the financial statement, whether it has got a direct impact on the last year, that has to be also seen by the practice. And now we are going to the employee benefits. What are the employee benefits? How the employees are benefited from the company. So normally with reference to employees, you have to say skilled and semi-skilled, and period of appointment, wages, hours of working, and if they work for extra hours, and what are the employees employees are benefited, whether is there any PF, ESI, gratuity, or there, everything has to be seen, and even the attendance registers are all to be seen by the practice unit. But what AS 15 says, practice unit obtained the list of employees benefited provided by the enemy. So that means the practice unit has to see all the employees details, whether all the benefits which are available as per the statute have been provided by the company to the employee. Also you have to see whether practice unit has obtained the grouping of defined benefits into defined contribution plan or defined benefit plan. So that means it is a duty of the practice unit to obtain all the contribution plan. That is, sometimes the employees have contributed some amount to the plan, and employer also they have contributed. Is there any defined benefit plan? Everything has to be seen by the practice unit. If there is any termination of benefits is paid, that is in case of any retirement, suppose if any employee is suspended, so termination benefit is being paid, whether it is being paid or payable during the year, and is recognized as an expense because it is an expenditure to the company. So termination benefit, it may be voluntary termination, that is in the form of retirement, and the compulsory termination by the company. So whatever be the thing, the amount has to be paid by the company to the employee, that has to be paid as expenses. Whether the classification of the employee benefit into long-term, short-term, retirement, or post-retirement employees benefits are appropriately under. Sometimes some companies they receive the money from the they cut the money from the employee salary and they park it as retirement benefit. Whether it is a short-term or long-term, everything has to be seen by the practice. So this is also another very important area that a practice unit has to see. Whether the practice unit has considered or obtained the actual valuation report. So actual valuation, what is the actual valuation? That is what is the life of the employee. That has to be seen by the company. Whether based on that life, whether the benefits have been given by the company to the employee, that also practice unit has to consider. And ESOP, whether is there any accounting of ESOP complies with the guidance note of issued by ICA. So that means the practice unit has to follow the guidance note issued by the ICA. Whether the financial statements disclose all the facts required under the statement. So all these have to be followed properly by the company, that is with reference to financial statements. Next thing that we have to see is A16, borrowing cost. This is nothing but loan received by the company. So normally what is important thing that is before going to the A16 is only guidance, and beyond that also we can do the audit, we can observe everything. So if any loan is being obtained, whether it's a term loan or working capital loan, what is the sanction letter, what is the collateral security that they are given to the bank or to the financial institution, what is interest rate, what is mode of repayment, whether those repayments are regular or not, everything has to be seen. And borrowing cost. So borrowing cost, not only it will be in the form of interest, it will also be in the form of bank charges. Bank charges will be in the form of processing fee, inspection charges, then stock audit fees, everything will be there in the borrowing cost. As a practicing unit, that point you have to see. Here, whether the due care has been taken by the practicing unit in identifying the qualifying asset. For which asset they have sanctioned a loan, that also the practicing unit has to take care. And whether the borrowing costs which are directly attributable to acquisition, construction or production of qualifying assets have been capitalized. Suppose if any loan is being sanctioned and all the borrowing costs till that asset comes into the picture have to be capitalized, whether the same thing has been done or not. Say after buying the machinery and if any further improvement is there, it should not be capitalized, it will be treated as revenue expenditure. So that's a clear indication that it's a capitalization of expenditure, then revenue expenditure have to be seen. It's the duty of the practicing unit, they have to see whether there is any income arising from the temporary investment of such borrowing and the same has been deducted from the cost. Sometimes the company would have borrowed the money instead of making the payment immediately, they would have kept in the form of deposit. So that will get some temporary income. So that has to be deducted from the borrowing cost. That is also the duty of the practicing unit has to see. Whether due care has been applied in accepting the capitalization rate considered by the client to determine the borrowing cost. What is the capitalization rate? Is nothing but interest. There is till the asset has come into the picture. What all the costs involved, that has to be, all the costs have to be added to the cost of the machinery or cost of the asset. So based on that only you have to do the depreciation and everything. Whether capitalization of the borrowing cost suspended during the period when active development is interrupted without any technical administration. Suppose in case suppose the asset has not been brought into picture, which are beyond the development of the, which are beyond the control of the company, then whether those have been stopped, because that should not be capitalized. And the next one is, as capitalization of borrowing costs ceased when substantially all activities relating to the assets are completed. So that means a clear indication that if the assets, there is all the thing with reference to assets, the process have been completed. So no further capitalization is allowed. So that point also you have to see. Whether the disclosure of accounting policy adopted and the amount of borrowing cost capitalized during the year has been properly or appropriately considered. So simple, till the asset comes into the picture, whatever be the cost, that is added to the borrowing cost. And now segment reporting. Segment reporting, for each and every segment, you have to report separately, even maybe a collective segment, and it may be a specific segment, or they classify the segment into primary and secondary. Primary is direct target of the company, and secondary segment is, it is an allied thing. That you have to clearly mention it. Whether the segment revenue, suppose if there is any particular segment, say if it is a furniture field, furniture segment, the loan is sanctioned, and another thing is steel segment, it is sanctioned. So if for each and everything you have to arrive at the revenue, you have to arrive at the expenditure, then for each and every segment you have to arrive at the profit. So whether the segment revenue includes only that portion of expenditure, the enterprise revenue, which is directly attributable to the segment, or portion of revenue attributable to a particular segment or revenue transaction with other segments, and whether the identification amounts of a particular segment is appropriately made to the measure of the segment of revenue. So for each and everything, so there's a furniture. Furniture is there, but it requires steel. So steel segment is different, and furniture segment is different. If you transfer, it may be a asset transfer. There is no profit in the steel. But if it is a, if it's a furniture business, so this is a separate segment. So for each and every segment, you have to calculate the revenue, expenditure, and what is the asset or what is the liabilities that have been created out of the segment. That also it is the duty of the auditor, duty of the practice unit has to see whether the proper disclosures of primary and secondary activities have been considered by the practice unit. It is the duty of the practice unit to consider the proper disclosure of primary and secondary activities and related party transactions. So there's a very big definition of related party disclosures, but it varies from act to act. It has got different meaning in Companies Act, in Insolvency Act, and even in Income Tax Act. Also, there are all related party transactions. For suppose if you are moving with any other specific act, you have to follow the rules and regulations related to the that concerned act. What are the important things that AS 18 says with reference to related party disclosure? Whether the practice unit has obtained all the list of related party details which is signed by the client. So that means it's the duty of the practice unit to obtain who are all the close relatives, who are all the related party, parties who are directly involved in the activities of the client. So you have to get the list first, then you have to scrutiny that. Then it has the practice unit correlated the transaction recorded in the register maintained 189 of the Companies Act. So that means you have to directly do the verification as per section 189 of the Companies Act of 2013, which clearly says about the related parties, whether the disclosure requirements under this standard has been considered by the practice unit. So that means you have to separately disclose all the related party transactions. Suppose if you are reporting under the Companies Act, then you have to separately report the related parties, who are all related parties, what are the related party contracts, what is the benefit that the company is given to the related parties. Everything have to be scrutinized by the practice unit. And with this, I'm just completing the second part of the accounting standard under the peer review. And I'm going to explain the remaining things in part 3 of the same thing. And thank you very much for patient hearing of this program. Nandri, Vanakkam.